Mr. Speaker, this bill, Mr. Speaker, is another in a series of regional legislation being proposed by the Eastern Caribbean Central Bank. As you know, they are the monetary authority for the Eastern Caribbean Currency Union, Mr. Speaker. The islands of the OECS share a common currency, which in effect, Mr. Speaker, is one of the strongest currencies in the world, the Eastern Caribbean dollar. And this is because of the strength of the ECCU, the Eastern Caribbean Currency Union. And you may note that the EC dollar is pegged to the US dollar. And for many years, for decades, Mr. Speaker, it has been $1 US is worth 2.7169 or thereabout EC dollars. That has caused stability in our trading systems, in our trading patterns, Mr. Speaker, confidence in the EC dollar, and because of the fact that there is an Eastern Caribbean Currency Union, the EC dollar has remained a very solid mode of exchange, Mr. Speaker, and an institution that we can be very proud of as members of the OECS, Mr. Speaker. And that speaks a lot to the value of economic integration. It speaks to the value of the fact that as a region, unity is strength, Mr. Speaker. And there can be no other institution that can speak more to the value of integration and the value of even sometimes you relinquish some of your sovereign authority and put it under the umbrella of a regional institution, how beneficial that can be. So, Mr. Speaker, the foreign exchange problems that some of our neighbors have, albeit they larger than us, thankfully, we do not have these issues in the OECS, Mr. Speaker. So it's a very fulfilling feeling, and all ministers of finance will tell you that the confidence that they have in the EC dollar and how our EC dollar is recognized and our EC dollar is used as an example of what stability in the currency should be, Mr. Speaker. But from time to time, as the system changes, as the financial infrastructure changes, there is need to modify laws and need to modify bills, Mr. Speaker. And the Eastern Caribbean Central Bank has seen it possible or necessary to amend the 2015 Banking Amendment, 2015 Act, Mr. Speaker, to amend the 2015 Act, Mr. Speaker. And that amendment is, we want to amend the 2015 Act, Mr. Speaker. And that amendment, we are asking members to support. The amendment, Mr. Speaker, is basically to clarify the definitions. It's basically to clarify certain definitions, Mr. Speaker, to ensure clarity of intent and consistency in language, Mr. Speaker. The definitions that the amendment seek to change, Mr. Speaker, or to strengthen, Mr. Speaker, are in Section 2 of the Act, Mr. Speaker. These amendments are as follows. Definitions of an affiliate, to clarify an affiliate, the activities that constitute banking business, the definitions of exposure and large exposure in the conduct of prudential and supervisory activities, the definition of a financial group and a licensed financial holding company, and the definition of an officer, Mr. Speaker. It seeks to clarify what that means, Mr. Speaker. It also seeks to create clarity on the definition of a domestic bank and a foreign bank. And this was amended to classify banks originating from within CARICOM but outside the ECCU as domestic banks, consistent with the revised Treaty of Chaguaramas, Mr. Speaker. Mr. Speaker, the definition of a branch is introduced to bring clarity and to distinguish between a branch where all banking business can be transacted and a bureau de change, which focuses on purchase and sale of foreign currency, Mr. Speaker. So a bank's branch is where all business activities can be processed. But the bureau de change is where you only change currency. So the Act gives clarity as to what's a branch and what's a bureau de change, Mr. Speaker. Mr. Speaker, it also makes provision certain policy issues, Mr. Speaker, to be addressed by the Amendment Act of 2018, Mr. Speaker. And these issues have arisen during the implementation processes and they require policy adjustments. The following key issues, Mr. Speaker, have been the subject of that change. The Banking Act 2015 imposes limitations on certain activities of banks, including the prohibition on declaring or distributing dividends during any financial year that the licensed financial institution experiences a loss, Mr. Speaker. And Mr. Speaker, this is significant because a bank should not be paying dividends if they have a loss. If you're supposed to pay profits, pay out of profits, Mr. Speaker. So if you have a loss, you should not be paying any dividends, Mr. Speaker, because what you're doing is the depositors are the ones who are paying and not the profit that you make from the bank. So it prohibits that, Mr. Speaker. It also gives restrictions on investments in real estate and restrictions on unsecured lending to employees to 50% of the annual remuneration of the employee, Mr. Speaker. So unsecured lending to employees, Mr. Speaker. The amendment confers the discretion on the bank to grant approval to financial institutions to activities referenced above and to lend unsecured employees up to 100% of the employee's remuneration. And again, Mr. Speaker, this is a necessary change under the circumstances, Mr. Speaker, particularly the one that says that you cannot pay dividends if you're having a loss. Mr. Speaker, the other amendments relate to audits and information, Mr. Speaker. As far as audit and information is concerned, Mr. Speaker, the current provisions require financial institutions to change the external auditors every 6 years and the lead concurrent partner every 3 years. Mr. Speaker, every audit assignment, there is a lead partner. So when the audit is being performed, the one people in the auditing firm, one partner is the lead partner. So all the files have to go to him, Mr. Speaker, for his approval, etc., before his approval, his agreement, he or she, before the file is presented and the financial statements are sent to the directors to approve. In the old Act, Mr. Speaker, auditors had to be changed every 6 years. An auditor could not be appointed if he was in the business, if he was auditing the firm, auditing the bank for 6 years or more. That has been amended, Mr. Speaker, to 9 years because of the fact that the business of auditing has become very complicated, Mr. Speaker. sometimes, to my mind, too complicated, but it has become very complicated, and it is not easy to get audit firms who have the capacity, who have the knowledge, who have the expertise, who have the staff to audit institutions like commercial banks or financial institutions, because the international auditing standards change all the time. You have to have new criteria. The standards are changing. So to get firms, audit firms, who have the capacity and the capability to audit large banks, etc., is the pool is becoming smaller and smaller, becoming smaller and smaller. And because of the liability involved in auditing, sometimes you find that audit firms sometimes don't want to get involved, don't want that level of exposure. So the Act seeks to amend 6 years to 9 years. So an audit firm can remain auditing a particular bank for 9 years instead of 6 years, Mr. Speaker. And also says that the lead partner must be changed every 3 years. So even the firm maintains the audit, the partner who is in charge of the audit, Mr. Speaker, must change, Mr. Speaker. It also deals, Mr. Speaker, with, so you have to change the auditor every, you have to change the auditor, the direct, Mr. Speaker, every 3 years. The managing partner every 3 years, Mr. Speaker, and the external auditor every 9 years instead of every 6 years, as in the present Act, Mr. Speaker. Mr. Speaker, it also speaks to directors, Mr. Speaker, and it says that they want to, so we changed it, Mr. Speaker, from 9 years, the firm every 9 years, and the partner every 6 years. Right now, the partner is every 3 years. So the firm can remain for 9 years, but the partner who is in charge of the audit can be changed every 6 years instead of every 3 years, Mr. Speaker. Mr. Speaker, finally, the changes in the paid-up capital for foreign banks and the treatment of discharged bankrupt persons appointed to serve as directors, 7 years, a 7-year term frame was included. This means, Mr. Speaker, that for you to be able to be a director in a bank, if you cannot serve, Mr. Speaker, if you're a bankrupt person. The treatment of discharged bankrupt persons appointed to serve as directors, a 7-year term frame was included, Mr. Speaker. So you have to be not be bankrupt for 7 years, Mr. Speaker, if you want to be a director of a bank. There's also introduction of an appeals process for persons aggrieved by decisions of the bank, Mr. Speaker, under the fit and proper provisions. So if you are aggrieved by a bank's decision, you can appeal that decision, and there's a process in which that appeal is held, Mr. Speaker. And it also prohibits the institution of shell banks and provides guidance to the outsourcing of services and investments, Mr. Speaker. Again, necessary to protect the consumer, to protect the depositor, Mr. Speaker. So when somebody puts their money in a bank, they can ensure that they can get their money back when they need it, Mr. Speaker. And this is very important. So for the confidence and the stability of the financial system, and the confidence and stability of the consumer when he places his savings in a bank, Mr. Speaker. Because you've heard about the collapse of banks, Mr. Speaker. So this act ensures that certain guidelines are put in place to protect the consumer, Mr. Speaker. But having said so, Mr. Speaker, the consumer must always understand that they have the last say. The money belongs to them. Sometimes we don't understand that the money in the bank belongs to the depositors. and depositors always have the last say, Mr. Speaker. So depositors must literally watch their business, literally mind their business, Mr. Speaker, and ask questions, demand questions from banks. And banks also must understand that the money they hold, the money that they hold for depositors, they hold the money in their custody, but it's for the depositors. And they must be prepared to answer the necessary questions and give the relevant information, Mr. Speaker, to consumers. And having said so, Mr. Speaker, sometimes it is very heartbreaking when particularly elderly people who do not have the facilities, who don't have, sometimes are very literate, Mr. Speaker, when they want to have a transaction from a bank, Mr. Speaker, they are asked so many questions. They are asked to open accounts. They are asked to have cards, Mr. Speaker. And I think something must be done where people, particularly elderly people, who do not have the necessary wherewithal, Mr. Speaker, to allow them to take their money when they want it. And we had to make some adjustments in the government system, Mr. Speaker, when the Treasury was demanding that checks be written to people, that people had to have a bank account, even though these people had a fire at their home, and everything got both, Mr. Speaker. So whereas we need transparency, we need accountability, we must never have processes and procedures that would eliminate people from achieving what they want, Mr. Speaker. We must adapt the processes that we have so everyone can access it, by the same time allowing for full transparency and accountability, Mr. Speaker. So I urge members to support the amendment, but I also urge the banks to change in some ways in which they treat their customers and to be a little more flexible. I know we're going to have legislation coming very shortly for the opening of bank accounts. That legislation is, and I want to thank the central bank for ensuring that that legislation comes to being very shortly for us to change the difficulty that people have in setting up bank accounts. That will come to a stop, to an end very shortly, Mr. Speaker. The central bank has always been mandated to cause the commercial banks to stop this thing about 3 ID cards and use your father or use your godfather to open a bank account, Mr. Speaker. And I'm glad that that will change, if it hasn't changed, very soon, Mr. Speaker. So, Mr. Speaker, we support the amendment, but we also want to tell the banks that they must sometimes exercise some restraint in the powers that they have. I understand that the customer is boss, and they must be more flexible, and they must, when somebody wants to access a banking service, it must be made easier for them, particularly the elderly and the people who are not exposed to cards and debit cards, etc., etc., Mr. Speaker. We have to find a way to make life easier for them. Again, Mr. Speaker, final thing I want to see is on disclosure requirements, Mr. Speaker. And I know my friend the Attorney General and the members of Cabinet always speak to him about something called NAMLOC. Where, Mr. Speaker, where people in the tourism industry who go to the bank with a few US dollars are asked all kind of questions, Mr. Speaker, about where they got it from and what they did for it, Mr. Speaker. Mr. Speaker, you know, and they put it under the excuse of money laundering. But, Mr. Speaker, I mean, it's rather strange for a taxi driver to go to the bank with $1,000 US, and you want him to ask, and he talk about insurance, all kind of fancy language, Mr. Speaker. I think that the bank, whereas they have to deal with disclosure, the bank must show a certain level of flexibility. There are certain countries in the region where US dollars are not only legal tender, but interchangeable. There are countries in the region where you pay in US dollars, they give you change in US dollars. But in St. Lucia, we seem to have a high level of I don't know what, that it makes it so difficult for people in the tourism industry to convert their US dollars into easy currency, Mr. Speaker. I don't think it's necessary. I think the compliance officers are over exuberant in these cases, Mr. Speaker, and I think that the banks have to be a little more flexible as it relates to dealing with ordinary people in this country, particularly in a country that you say that is a tourist destination, Mr. Speaker. So whilst I support the amendment, I support the strengthening of the regulations and the processes, I also support more flexibility and more give and take as far as bank transactions are concerned. I thank you, Mr. Speaker.